We are about to put on a masterclass for indicators. I'm going to share with you my top 5 favorite indicators, why I like to look at these, how they help, and how they can, more importantly, help you as a swing trader, especially if you are swing trading growth stocks part time. Welcome to the show, everybody. My name is Mike. And if this is your first time joining us, uh, make sure that you like the channel that you're watching on, uh, post a comment and subscribe. Let us know where you're at. We'll be taking questions throughout this live stream and also answering questions later on as well. So let's jump right into it. The top 5 indicators that have helped me so much through the years, the top 5 indicators that have helped me to finally trade well part-time. It took me a long time to be trading well and to start to trade well part-time, and then to finally make the transition to being a full-time trader where I was doing this consistently. So let's jump over to the charts and take a look. I am going to share my screen over here and walk you through a current trade that I'm in right now. The ticker is SMCI. Just bring Instagram over here. You guys over on uh, YouTube and LinkedIn and Facebook are all there already. So, couple of things, right? The first indicator that's the most important for everybody, for me, for you, for all of us, is going to be price, followed very closely by volume. The reason why these two are the two most important, price and volume, is because everything else is predicated on price and volume. Your relative strength line, price and volume. Your stochastics, price and volume. Relative strength, price and volume. All of it, moving averages, price and volume, Fibonacci, price and volume, whatever it is that you're looking at, price and volume are the things that are going to be influencing those indicators as well. Also, time. Time is an important one. Time is an important indicator. That'll be right up there with number 3, and you might even think of it as a bonus one. So we've got price, right? All these bars here. And you notice how I'm using regular old bars. I'm not using candles. I don't even have the open on here, just the close on each one of these bars. Now, the reason why I have it set up that way is because that's what William O'Neill used. That's what the same kind of charts that Mark Minervini had in his books. And it's the reason why, when Bill O'Neill wrote How to Make Money in Stocks, the reason why he was using simple bar charts with just the high, the low, and the close is because that's all that he needed. He wanted to keep it as simple as possible. There's so many things that we can throw on the chart, and maybe you're looking at this chart right here and thinking, man, there's a bunch of things on this chart. There's really not. But the idea for you when you are thinking about indicators is to keep it as simple as possible. That's why when I'm looking at charts, I like to just look at the high, the low, and the close. So that's why what each one of these are telling me here, each bar and each individual bar is telling me a story. We'll get into that in a moment. Let's go through the rest. So we've got the price action, right? So the bars, the price, the volume, which is down here. That's an important one. We've got relative strength. That's paramount. We've got the stochastics up here. I'll tell you a little bit about those as well. And moving averages. Those are 5 very important ones that have helped me through the years. And one more thing I'm going to throw in for a good measure is multi-time frame analysis. You need to know about multi-time frame analysis. So how do you know about multi-time frame analysis? We'll get into that. Again, as we're going through all this, type in your questions into the chat. If you're watching this later on a recording, drop your questions in. So price and volume. We want to be looking at these things together here. The chart that we're looking at right now is SMCI. This is a stock that I'm in, and I actually started a newer position right here. I just got in this one just the other day. Over here, it's already up about 10%. Now, why would I start a position way up here, right? Price already ran all this way. Why would I start a new position? Why would I add to a position way up here when prices already run so far? Few reasons. A bunch of them are related to price. A lot of them are related to volume, and they're related to trends as well. So let's go through it. So price. Price has been running on heavy volume. You see how back here, I'm going to make this a little bit bigger. You see how price started running way back here on earnings, right? We got the little earnings symbol right there. Price blasted off to space on earnings, and then it consolidated briefly. And you see how the volume down here started to dry up as price was moving sideways and tightening up. And then it blasted off again and volume increased. That's showing that there's eager buyers, there's demand for it. Price ran up and it didn't sell off that much, right? The seller, the people that bought in and all the people that held previously were not eager to sell at this price. Because how could you tell that? Because the volume over here is so low. And then what happens? Price blasts off again and more buyers are stepping in. More buyers are stepping in. And so that's showing you that there's a lot more demand that's still coming into the stock. Price consolidates a little bit over here, and then again gaps up, blasts off. Great. That's been the story. Price cannot, however, right? Like even though that was quite the run from what was that? That was $100, about $100 to almost a little bit more than 250. Well, what it get to 270, right? That's a big, big run. Price can't go up forever. Price needs to consolidate. So what happens? Price starts to consolidate, starts to pull back, and it pulls back all the way to about 210, right around there, right around that purple moving average. By the way, we're talking moving averages too. Moving averages are very important. I've got a few of them on this chart. The moving averages that I like to look at that have been key for me are the 5, the 10, the 21 EMAs. I also have a couple of other moving averages on this chart. I've got the 50 SMA, a 100 EMA, I've got a 200 SMA all on this chart. I learned this and I've included it in my book, The Trading Mind Wheel. And the reason why I like to look at these moving averages are because they're telling me where the momentum is. It's telling me where short-term support is, where intermediate term support is, where institutional support tends to be. That's the 50-day. And then where the longer term lines in the sand are for the big players. You've got the 100. That's what happened right down here, right? It's not a coincidence that price pulled back and bounced right off that level. And then the 200-day tends to be the final line in the sand for those big players. So all this stuff serves a purpose. And when you are going to look at indicators for your own charts, everything on there should serve a purpose. And you do want to try to keep it as simple as you can. Now, back to the chart over here. So price pulled in, and you might look at some of this volume down here and say that, oh, volume started to spike a little bit. But when you've run a long way, especially after you've run a long way, you want to take a look at the decline, how price is coming in, and the volume relative to what it was. So even though this volume over here is above average, relative to what it was back here, it's below, right? Volume tapered off a bit. And as price came in, it started to tighten up around the 21-day exponential moving average, that purple line. Let's go over to a 30-minute time frame. Now we're getting into multi-time frame analysis. And you can see over here too, right? So we've got, uh, this is a 30-minute chart. The moving averages on this chart are the same moving averages that were on the daily chart. I find this to be extremely helpful because when you're trading off of one time frame, right? My primary time frame to trade off of is the daily time frame. But I'll look at 30-minute charts to get a multi-time frame analysis going, and it allows me to get a lot more precise, a lot more surgical with my entries and my exits. So by looking at the daily moving averages down here on a 30-minute chart, I can see that price was a little wider and looser over here. It came down, it bounced right around the 21 EMA, and then it tightened up right over here. And that is where I bought in and started fresh position, and I'll put my annotations on that. I draw all over charts. I bought in right here, and so far price is just hit 10% for me. Get all that noise off the chart here. So bought in here, price ran up, pulled back, came very close to that 10 EMA, and then is continuing its ascent. Post questions so that you have so far into the chat. And we'll talk about a couple of other indicators that I have here. Another indicator that I have here is this line right here. This line is the relative strength line versus the S&P 500. Now, here's why this is one of the most important indicators that I have on my charts. The reason why I value it so highly is because it's telling me the price versus the index versus the S&P 500. So by doing that, it's telling me, is this a leading stock? Is it beating the market? The steeper this line is moving up, the more I know that it is beating the market. If this line is getting into new highs, it's beating the market. I could take a look at this line and compare it to other stocks in its same industry group. That's going to tell me how much this stock is a leader versus other stocks within the same group. So I'm able to find the leaders all by looking at this one line here. That's how important this relative strength line can be if you know how to use it properly. That's one of the things that we discuss inside the Mara Elite program. If you're interested in the Mara Elite program, go to marawealth.com. There's a whole bunch of information on that website. The vast majority of it is free. And if you are interested in getting coached by me, then you could go to the membership portion of the site. Anyhow, the relative strength line shows us if this stock is leading the market or not. Now, you might take a look at yourself and say, well, Mike, it was leading back here, right? Because the relative strength line was pushing into new highs, and then it was pushing into new highs, and then it was pushing into new highs. You're way down here. This isn't a leading stock anymore. When leading stocks consolidate, you're right. They take a breath, and for a brief period of time, they're not the leaders. However, we want to be aware of their former leadership status, and two, when this relative strength line starts to turn up, especially if it starts to turn up ahead of the price action. This relative strength line here, when it broke out, right when I bought it right there, this relative strength line was breaking out as well. In fact, it was leading the price action. How is it leading the price action? Because in order for the price action to get above this peak right here, it did that already a day or two ahead of time, right? You see how the relative strength line was breaking out above here ahead of price breaking out above here. That's a very subtle sign of how a leading stock will perform, of how a stock like this, or and it's not just SMCI. It's This could be applied to any stock that you're looking at, and that's why price action continues to repeat itself over and over and over again, and that's why uh, historical analysis, right? Like all this is based in history. You could go back and look at any of the leading stocks throughout history, and they've all exhibited the same types of properties, the same types of price action, the same types of movement in the price, the volume, the relative strength. Everything that we're discussing here has been done and proven historically. That's why I'm taking that stuff that's happened in history and applying it to today, and that's how I'm able to find a stock like this that broke out 3 days ago and has already given me more than a 10% gain in my account. All these things are super important. So we've got, what do we talk about so far? We spoke about price, we spoke about volume, we spoke about moving averages, we spoke about relative strength. Let's talk briefly about stochastics. And I see you over there on YouTube, Mark. Well, welcome, welcome. So let's talk about stochastics. I like to have stochastics up here at the top of the chart. I wasn't always a stochastics guy, but Stu, if you remember Stu from the Trading Mind Wheel virtual conference, Stu is also one of the coaches in the Mara Elite program. He got me interested in looking at stochastics. So I put stochastics on my charts and I started to observe how they interacted with the types of setups that I would take. And lo and behold, the vast majority of the setups that I would take would have stochastics starting to turn up like they are right here. And that would be a sign of momentum building in the price action. Now, perhaps you're saying, but Mike, you bought back here and back there, the stochastics were showing selling, right? Stochastics are a momentum-based indicator, so it's showing momentum to the downside. Why would you be interested in that? This is where our multi-time frame analysis comes back into play. Let's go back down to the 30-minute time frame. If you recall, I'm buying right here. The stochastics are way up, showing momentum to the upside, right? That's showing, some people might look at this and say that, oh, it's overbought. The thing with stochastics is that what's overbought can often stay overbought for a very long time. So when I'm looking at something being in the quote unquote overbought territory, I'm also seeing it as a potential momentum indicator if it's coupled with the tight price action and the tight setups and the pivots where I'm looking to get in. That's where you start to take indicators and you see how they apply to you. It's not about how somebody else on the internet is using an indicator. It's not how I'm seeing an indicator. You want to take the knowledge and apply it and see, well, how does it fit into what you're looking at? And the way that it worked out for me was taking a look at, okay, I'm going to be getting in right around here. All right, there's some selling momentum on the daily time frame. Let me take a look at the 30-minute because I like to use multi-time frame analysis and get surgical with my entries and my stops. And lo and behold, momentum to the upside down here. So that's how I like to use the stochastics. It's a complementary. It's it's a complementary indicator. It's showing me, it's adding a bit of confirmation to what I am looking at as far as the price and the volume and everything else that we discussed already. Let's take some questions from the audience. Let's take some questions from the audience. And by the way, if you, uh, everything that we discussed already, I cover it all in the Trading Mind Wheel. We cover it all in the Trading Mind Wheel book. So if you have not gotten the Trading Mind Wheel book, go get yourself a copy of the Trading Mind Wheel book. And if you do have a copy of the Trading Mind Wheel book, please leave a review on the place that you bought it. That's going to help this book get into the hands of a lot more people. So kindly do that. Thank you. Let's take the questions. All right, so we've got a lot of people joining in here on Instagram. Let's go through, scroll through, and see what questions are coming in. You guys over there on Facebook, LinkedIn, YouTube, and Twitter, get your questions in. All right. See a lot of people coming in saying hello. Welcome, Arthur. Welcome, Ayush. Welcome, Mukesh. Welcome, Nishant. You could do this. Love the positive attitude. Absolutely. You know what? If I can do this and all the things that we discussed today with price, with volume, with moving averages, everything that's related to trading, these are all things that I learned how to do part-time. I learned how to do all these things while I had my day job, while I was going to grad school, while I was starting a family. Right? Started doing this stuff before my daughter was born, but I was engaged and I had a full-time job, grad school, all these things, and I was learning how to trade. So if there's hope for me, there's hope for you as well. And it's not where I learned how to trade and then all of a sudden riches immediately followed, right? It took a long time to learn and then to turn the corner. What helped me to finally turn the corner was getting great people around me and learning from them and being able to bounce ideas off of people. Like it's one thing to go and study on your own. It's another thing to be able to talk to other people and get good feedback. How the type of feedback that you get, I learned too that you need to be careful with what you accept, right? There's a lot of very well-meaning people out there, but not everybody is a fantastic feedback giver. Not everybody is great at coaching other people. The best coaches that I found were the ones that would not give as much of what they would share a little bit of what they would do, but more often they would ask questions, they would probe. So that way they would help lead me to the right answer versus trying to spoon feed, if that makes sense. Here's a question from I'm Third over on YouTube. Question is, when it's in choppy market, you ride the stock and hold through pullback or just get a quick profit? Very good question. So the way that I like to trade is to swing trade. So I am typically not holding through deep pullbacks, but it also depends. It also depends on where I'm at in a trade. So, for example, let's go back to this chart over here in SMCI. And let's say you started a position right down here and you're in this position and maybe scale out some over here, maybe scale out a bit more over here, and you're not holding your whole position through a pullback like this. Perhaps you're able to hold some and then re-add over here. That's I do the same thing on a shorter term basis too, but it all depends on where I'm at in a position. The further a trade goes while I'm in it, the more of a leash I'm willing to give. But let's say let's say you started a position right up here and it runs up a little bit and then it pulls back. I'm not going to give that one so much room. The reason why is because if I start here and it runs up and it pulls back, it hasn't earned the right to be held and to to be held through a pullback. So where we get in and how the price action is relative to our position matters quite a bit. Hopefully that answer helps you. If you have additional questions on it, please let me know. Happy to talk a bit more. Tomorrow, Saturday, we're having our weekly mastermind session with our Mara Elite members. The mastermind sessions go for 2 hours every Saturday, and we're talking about market conditions. So we'll go through major indexes. We'll talk about the monthly, weekly, daily time frames. We'll talk about, we get pretty deep into the weeds of everything that is causing the market to move, everything that is market's at right now, how the market is setting up for the following week, trade ideas, all that goes into the mastermind, and all the microphones are open. We do this discussion in Discord, so that way, as as I'm presenting my analysis, and it as I'm going, people are able to ask questions, comment, and uh, everybody's sharing their thoughts in there as well. And it makes for a really great educational environment. And again, we're doing that tomorrow. So if you're interested in joining, go to marawealth.com, click on membership, and well, we actually need to update the sales page because we are putting the group coaching to be available in the premium level. So if you are signing up and you grab the premium level of the membership, you'll be able to get the group coaching. The one-on-one coaching is still reserved for VIPs. That level is closed for right now. We've got enough VIPs into that level about a month and a half ago, where we close it, and we'll be reopening the VIP level later in the fall. But if you want to get group coaching right now, you can, and just sign up for the Mara Elite Premium level. Great value add there. Let's see, what other questions do you guys have? I'm scrolling through here on Instagram. Question from Naveed. What type of stochastic indicator am I using? So I'll show you the settings on my stochastics. Now I'll put this over here. And I will bring the chart back up for YouTube. So I am using stochastics that are 21, 4, and 4. So if I click over here on settings, you can see that the length of the stochastic is 21. So 21 period. I like to keep it on 21 period because my average gain is about 21 days. So that's where that part comes from. And then percentage K smoothing 4, percentage D smoothing 4. Those are the settings that it came with, so I left it at that. The more important thing with stochastics that I found, even more so than the settings that I have here on the chart, is the consistent use of whatever the settings are. So if you're going to use these settings, if you're going to use some other settings, the important thing is to have them be consistent on the chart. Well, find the one that you like to use and then let it be consistent on the chart, because it's through that consistency that subtle nuances will begin to pop out at you, especially when you're doing your post-analysis work. It's actually June 30th right now, and it's the perfect time to be doing post analysis. You could be doing your end of month, your end of quarter, your end of half month analysis. Do it today, do it over the weekend. Great time for it. I'm doing it myself, and I'm already learning quite a bit. Right, the learning never stops. Prasan, please share your secrets. I'm about as transparent as you could possibly get. So everything, well, whatever questions that you have, Prasan, ask them here. I will be as transparent as I humanly can, and I'll give as thorough as an answer as I possibly can in the time frame that we have. And also inside our elite program, that's where everybody gets full access to me all day, every day, and can ask as many questions as you want. Inside that program too, I'm also sharing my thoughts, my analysis on the market, exactly what I'm doing, how I'm doing it, and why. And I'm not just sharing trades as they're happening and after the fact. No, well, what I'm doing is I'm doing all the prep work the day before. And then I'll share that prep work the day before. So that way we're all working off of the same thing. Now, it's not meant for everybody to just be like, oh, let me go follow what this guy trades and I'll try to buy the same thing. No, it's meant to be educational based. There's some people that will use it as a baseline for their own research, save some time. I do encourage that. But the idea is to not just blindly accept what somebody else thinks. You want to learn why they think the way that they think and to see what parts of it you want to perhaps adopt for yourself. Go deeper, probe, ask additional questions. So that way there's real learning that takes place. And I that's where the transparency part comes in and why I'm in this Discord chat morning, noon, and night, 6 days a week and doing masterminds and ask us anythings and everything inside the group so that way everybody can learn from me, from the other coaches, and learn from each other as well. If you are ready for that, again, go to marrowwealth.com, click on membership. If you're not ready for that and you want to do a bit more book learning, that's where the Trading Mind Wheel comes into play. The Trading Mind Wheel is available on Amazon, it's on Barnes and Noble, it's where everywhere where books are sold, and it's already getting fantastic reviews. If you've already read the book, again, please leave a review because that's going to help the book get into the hands of a lot more people. And that's a goal. That's really the goal. We want to educate as many people as we can, help as many people as we can. So if you're able to help with that mission, I'd greatly appreciate it. We're already a bit over the half an hour mark. I'll take one more question if it's in here, and then we'll call it a weekend. I will be taking off on July 4th too, so next week we'll be doing Monday and Friday. All right, last question from Naveed. Naveed says, "What time frames do you look at?" I look at the monthly time frame, the weekly time frame, the daily, and the 30-minute. Now, here's why I look at those time frames, and I'll bring my phone back over here, and I'll bring the charts back up, and let's talk about each of these. So, I've got monthly time frames, weekly, daily, and 30 minutes. So, what do I do with each one of these and where is my focus? My focus when I'm doing my basic round of screening, the first round of screening, I'm really focused on the weekly time frames. And the reason why is because that's where a lot of the larger consolidations happen. A lot of the bigger chart patterns happen on the weekly time frames. I don't want to be buying a 1 week consolidation. I don't want to really be buying a 2 week consolidation. I like my primary bases to be 4 or 5 weeks at least. The longer they are, most of them tend to be in the realm of about 7, 8 weeks, but I like to have multi-week bases. Then, once I'm done with the weekly chart, I'll go down to the daily. And I'm really just have the monthly chart up so I know in broad terms how price has moved. But after looking at the weekly chart, then I'll go down to the daily time frame. And let's make the daily time frame a little bit bigger. That's when I'll start to see how price is reacting, if it's tightening up, if it's widening, if it's getting support at around key levels. And then if it's doing all that, and I'll also, of course, look at how it's behaving around the moving averages, how the relative strength line is moving, how the volume is moving, all the things that we already spoke about. And then if all that is in place, then I'll go down onto the 30-minute time frame and start to really pinpoint where is the potential entry point, where's the potential stop. And sometimes if the 30-minute time frame is wide and loose, whereas it kind of look good on the daily time frame, but it doesn't also look good on the 30-minute, then those are trades that I will let pass. And more often than not, that ends up being the proper move. So that is how that's how I analyze charts in a nutshell, as much as I'm able to give you in a brief live stream. Hopefully, you found this helpful. Again, if you want to work closer with me, the Mara Elite program is the way to do so. Go to marawealth.com to work directly with me. And other than that, I hope that you guys have a wonderful weekend, a wonderful 4th of July holiday, and I'll see you back here again on Monday for our next morning coffee with Mike. Take care. Much love. Peace out, everybody.